Just recently, we performed a stock analysis on Orchid Island Capital, stock ticker ORC, and we discussed how they will be affected with the increase in interest rates. On June 22nd of 2021, Orchid Island Capital reported that they entered an equity distribution agreement with JP Morgan Securities LLC, among other agents. So today we're looking at ORC's Form 8K, so we can understand equity distribution agreements and whether they will affect Orchid Island Capital's share price positively or negatively. Form 8Ks, also known as current reports, must be filed by publicly traded companies within 4 days of practicing specific triggering events. These forms have multiple different triggering events, meaning the 8Ks can communicate many different things to shareholders, but essentially you should know that they are meant to do just that: keep the public informed on business operations which are out of the ordinary. There's a link in the description below from Investor.gov which outlines these different triggering events. Don't forget to subscribe to the channel on your way down there. Now that you know exactly what a Form 8K is, let's look specifically at Orchid Island Capital's reported on June 22nd of 2021. We've discussed there are many reasons to file a current report, and ORC is doing so as they have entered an equity distribution agreement in which they plan to introduce more common stock to the market. So I want to make sure that you are aware that there is no reason to have concern over this par value of 1 cent per share. Par value of a stock has no correlation to the market value or share price they are trading at. In the case of stocks specifically, par value per share essentially communicates the lowest possible price said share can be sold at, which is not to be confused with the par value of bonds, which is the price that the bond was introduced to the market at. Equity distribution agreements, sometimes referred to as sales agency agreements, occur when a publicly traded company enlists the services of a broker-dealer to conduct an at-the-market or ATM offering of new company shares. In an equity distribution agreement, the number or value of shares to be introduced to the market must be specified, and the issuing company also has full control over when these sales occur and whether they would like to stop the equity distribution agreement at any point. Make sure you watch till the end of the video to find out how equity distribution agreements affect the company's share price, specifically ORC's. Orchid Island's equity distribution agreement is for up to $250 million in common stock. If you want to follow along with me, there's a link to ORC's Form 8K in the description below. As we continue down, you will see the agents or broker-dealer parties responsible for selling the shares or soliciting purchases if you want to sound classy. These sales are to occur daily by default. However, Orchid Island Capital really maintains full control over when and how many of the shares are sold daily, as long as it is in accordance with predetermined agreements with the agents and established regulations. Equity distribution agreements, as they introduce new outstanding shares to the market, increasing supply, generally cause a short-term decrease in share price. Companies partake in equity distribution agreements for a multitude of reasons, but the main goal is to raise capital, most often used to grow business operations or pay off debt. So the real question to ask yourself is, what will management do with this money? In the case that a company does not efficiently use the capital generated from their first equity distribution agreement, they may plan to do this again somewhere down the line, further increasing the supply and diluting the shares. On the other hand, many times management has a smart plan laid out, allowing them to capitalize off their newfound equity, increasing their business and further growing their market cap. If you watched my stock analysis on ORC, link in the description, you know that they are highly leveraged with a massive debt obligation of about $4 billion, making them highly vulnerable with increasing interest rates. Although they have been hedging against this by shorting the 5-year Treasury bonds, I do not believe this will protect them enough, so I see the equity distribution agreement to be an important step in paying off debt, getting in front of increasing interest rates, and properly beginning a strong recovery. If you hold a position in ORC, I would like to hear how you plan to proceed in the future. Buy, sell, or hold. Please subscribe to the channel and high-five the thumbs up button so more people can see how equity distribution agreements affect share price. As always, I'm Patrick Zimmerman. Thank you for your time, and have a nice day.